Hey everyone, and welcome back to Talk Tickers. Today, we're digging into Cytokinetics, ticker CYTK, and their Q2 2025 earnings. Now, at first glance, the numbers looked fantastic, a huge beat. But the stock didn't exactly celebrate. So what's going on here? Let's break it down.
Okay, so the first number that just pops right out at you is this one, $66.8 million in revenue. I mean, for a company like this, at this stage of the game, that is an absolutely massive, headline-grabbing number.
And to give you some context here, Wall Street analysts, they were expecting something around 2, maybe 2.1 million. Cytokinetics comes in and drops nearly 67 million. When you see a beat that big, I mean, it's not even in the same ballpark. Your first question has to be, where in the world did that come from?
All right, so let's dive into the headline numbers for Q2. On paper, this looks like a textbook case of a company crushing it, a story of beats and surprises. But as we'll see, the surprises were maybe not the kind investors were hoping for.
And look, it wasn't just revenue. They beat on the bottom line too. The actual loss per share came in at $1.12. The consensus? Analysts were modeling a loss closer to $1.40. So let's recap. A monster revenue beat, a nice earnings beat, everything's pointing up, right?
Well, not so fast. And this is where the story gets really interesting. This is the big puzzle we need to solve today. If the headline numbers looked that good, why did the market basically just shrug? Why wasn't anyone impressed?
And here it is. This is the answer. When you break down that revenue number, you see that a whopping 78% of it wasn't from selling their product. No, it was a one-time collaboration payment from Bayer. We're talking about $52 million that's not going to show up again next quarter. So this wasn't about the business suddenly performing better. It was really just about the timing of a single check.
The market is smart. It saw this immediately. The stock actually traded down over 3% on this good news. Why? Because savvy investors know to look past the one-time stuff. They discounted that Bayer payment almost instantly and turned their attention to what really matters, the future. And more importantly, the risks that are still out there.
And that's our pivot. Because the real story for Cytokinetics has pretty much nothing to do with these Q2 financials. Nope, it's all about the future. It's all about their lead drug, aficamten, and one very, very important date on the calendar.
Okay, so just a quick explainer for anyone who isn't deep in the biotech world. You're going to hear this term a lot, PDUFA date. Think of it as Judgment Day. It's the final deadline for the FDA to say yes or no to a new drug. And for a company like Cytokinetics that doesn't have products on the market yet, this is literally a make-or-break moment.
So looking at the calendar for the rest of the year, it is jam-packed. First up, late August, we're going to see some really important trial data. Then in September, there's a huge meeting with the FDA. And it all leads to this, December 26th. That's the big one. That's the PDUFA decision date. Seriously, the entire fate of the company really comes down to what happens in these next few months.
Now, the one piece of really good news here is that they have the cash to see this through. They ended the quarter with about $1 billion in the bank. What that means for you, the investor, is that they're well-funded. They don't need to go out and raise more money before these big events, which is great because it takes that risk of dilution off the table for now.
All right, so that brings us to my favorite part, the next call. We've looked at the quarter, we understand what's coming up, so let's put it all together. What's our rating on the stock, and is there a smart way to trade it?
So this is really the billion-dollar question, isn't it? You've got this massive all-or-nothing event just around the corner. It's a total coin flip. So how on earth are you supposed to position yourself in a stock like Cytokinetics right now?
Here at Talk Tickers, our rating is market perform. And here's why. The upside, if aficamten gets approved, it's huge. Absolutely massive. But the downside, if it gets rejected, it's just as big. It's the definition of a binary event. And because of that, we think the stock is probably just going to trade sideways, more or less in line with the rest of the biotech sector, until we get a final answer.
Okay, now, if you're someone who's comfortable with a bit more risk, here's an interesting way you could think about playing this. We'll call it the PDUFA volatility play. First, you just have to accept this is a coin flip. So instead of buying the stock outright, you could look at long-dated call options. This gives you all the upside if the news is good, but your maximum loss is just what you paid for the options. Now, if you want to get even more sophisticated, you could hedge that position by shorting a biotech ETF, something like XBI. What that does is it helps protect you if the whole sector sells off, and it really isolates your bet to being just on the aficamten decision itself.
All right, before we sign off, I have to give you our very important standard disclaimer.
Okay, so please remember everything we just talked about, especially that trade idea, is just for educational purposes. It's to get you thinking. This is not financial advice. Look, at the end of the day, the future of Cytokinetics has nothing to do with that Q2 report. It all comes down to what the FDA says this December. And the big question you have to ask yourself as an investor is this: is the potential reward here big enough to justify taking on that massive binary risk?